Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro continue to remain under pressure. We did close under 1020, so that pretty much locks in the place for that move down to the head and shoulders target of 917. Also, we just had a headline come out. The OPEC technical panel may agree today on a need for a deeper oil cut of at least 500,000 barrels a day. That has gently pushed up the crude oil. I mean, we've already seen a couple of moves already up towards 52.20 in the Asian session, then one just after midnight, and now we're at $52. Also, obviously, a bigger story here is equities just continue to move higher. It's just amazing. Look at that. We've already gone above 33.50. I mean, we topped out, close to around 33.60 or 33.56. It's amazing. Like I said, it's just continued to go higher and higher and higher. Each day just seems like it brings on another brand new high, to say the least. Crude oil, not crude oil, but gold continues to remain relatively weak. I'm surprised we're not even lower than that, but we are holding here 1563 in the April contract. Also, some headlines from Lagarde regarding some patience for the ECB. Also, Eurozone growth stabilizing, but like I said, it's not making any difference. The euro continues to fall, and we pretty much sealed the deal on that. Cable remains here just below 130. Dollar CAD really stuck here in this area just below that resistance we've had in place since I think Monday, 33.09. Only market that's really moved has been the dollar yen, which has moved almost close to 110. Compliments of the move in equities, and then of course dollar peso, which is in right now we're in the 1850s. New lows there, and potentially opens the door to 1844, but there's a pause around 1851. Of course, the dollar index, we have a key level there at 98.42. If we get a daily close above that, it really opens it up to challenge those highs up there around 99.50. Looking at data coming into today, we did have German industrial orders, also had German market construction PMI earlier. We do have coming into the States, though, is going to be challenger layoffs, as well as initial jobless claims, labor cost, and productivity data. And that's going to be it until we move into Asia. We did get a very strong ADP yesterday, close to almost 300,000, which I guess the markets, continue to go on and move on that, expecting, here we are, came at 291,000. So expecting potentially a strong NFP. That being said, I did see some comments pointing at, some of the reports that we've had, PMIs, and suggesting that labor may come in somewhat weaker. So we'll see how that goes and plays itself out. We could maybe see or the labor data has come in a bit weak over the past month and a half, and that maybe we may see NFP come in weaker on that news. We're seeing crude oil shed that headline. As I mentioned, we had already come up there and challenged that area up there at around 52.20. You can see here on the first go around in Asia, then in just after midnight, and we've come up here, made a challenge, and then we're already sliding, giving it right back. We'll take a quick look at the news. The yuan and the Aussie jump after China cuts import tariffs and virus fears ebb. The Australian dollar and Chinese yuan rose on Thursday after China unexpectedly said it would have tariffs on some of the U.S. imports, a goodwill gesture that added to hopes the global economy may be able to avoid a major shock from a virus outbreak. China said on Thursday that the cuts applied from 0501 GMT on Valentine's Day, and it hopes to work with the United States to eliminate all tariff increases in the future. That came with investors already beginning to emerge from safe haven assets and bet on their virus being a short-term shock. Any news along these lines is good news, said Robert Rennie, head of strategy at Westpac in Sydney. It adds to the sense that there's a number of policies, both domestically and globally, which could help to mitigate the impact of the coronavirus. And while adding its actual efficacy may be limited because of the expected hit to the demand. The yuan advanced to 6.960 yuan per dollar. It's high since January the 23rd, while the Aussie rose by the same margin to 67.59. All been heavily sold in favor of safer currencies such as the yen in recent weeks as investors have scrambled to price in a sharp economic slowdown in China. The death from the coronavirus in mainland China rose by 75 on Thursday, its third consecutive record daily rise. Infections stand at 28,018, yet with more than 99% of them in China and hundreds of exports set to gather in Geneva next week. Experts set to gather in Geneva next week to devise plans to combat the virus. Investors have seemingly gravitated away from the more dire views about the epidemic's impact on global growth. China's authorities have also pumped in billions of dollars into money markets this week in an effort to restore calm and pledge to do more to support the economy. Overall, the SP 500 made a fresh record closing high, and Asian equities extended the rally on Thursday. Firm U.S. private payrolls reports, which boosted their biggest jump in nearly 4 years, drove the dollar to a 2-month high against a basket of its peers. The greenback extended its gains against the pound in Asia, while only a fraction below a 2-month high against the euro. This is a market that's just waiting to go higher. It's just a need for a reason, said Charles Weston. It's the jack in the box with a lid that's just waiting to spring up. Though, that is not to say caution is not absent or is absent. Market risk assets are subject to trade at substantial discounts to their prices a few weeks ago. As I mentioned with the dollar index, you can see right here, a daily close above 98.48, and that's just going to send us to challenge those highs again above 99.50, I think 99.70. Oil prices are rising, but the recovery is much slower than the sell down as the size of the expected hit to demand grows. Places where optimism isn't being felt include Thailand and Singapore, which have room to ease easier monetary policy. And lastly, we mentioned about headlines from Lagarde. Eurozone growth remains weak. Remains modest, but there are tentative signs of stabilization. Even if the coronavirus outbreak in China clouds the horizon, the ECB has maintained ultra-easy policies for years to boost growth And Lagarde said this support was still needed to shield the currency bloc from global headwinds. While uncertainties surround the global economic environment remain elevated, those related to trade tensions between the U.S. and China are receding. Other risks, however, are still lingering, such as the uncertainty surrounding the impact of the coronavirus, and a renewed source of concern. The domestic economy remains resilient, she added. That's a funny one. With consumption still rising, unemployment at a 12-year low, and employment at record highs. There are tentative signs of stabilization. Forward-looking indicators have come in slightly more optimistic. But inflation, ECB's primary objective, remains weak, and low growth is halting the buildup of inflationary pressures. So here we are at 110 here on the euro. Let's go on and move into that analysis. So the euro has filled the bill with the close sub 1020. Target is a head and shoulders move to 917. Immediate support comes in at 966 with resistance at 1033. So we talked about this. It was going to be tough sledding. I mean, if you get that close below 1020, and we got it. And so the door's open. I mean, the head and shoulders were still in place. Remember at the beginning of the week, we closed here on Friday and we started at the beginning of the week saying, hey, resistance is going to be right here at this trend line, confluencing with the level, 1105. They were going to need 2 daily closes above that to slow down the bears, and a close above 1170 to negate the head and shoulders. So the head and shoulders was never negated despite Friday's close. Remember, we were below the trend line and below 1105. And from there, we just kept working a little bit lower. And with the close below 1020, hey, it's in full effect going to 917. That's the target. Maybe we bebop around, but look, the target, I mean, how anybody could be bullish on this thing is beyond comprehension, to be quite honest with you, or that would want to try and buy this thing. So once again, we're looking for a move down to 917 for the completion of this target. Short-term support is going to be 966. And let's go move into the cable. Okay, so cable dipped below 2980 and was able to find support before reaching the bias chart level of 2934. Immediate target 2898 remains in place. Resistance is going to be 3032. So we've been pointing out here to this 2898 as potentially where the market can get to, but we've had our support at 2934. We didn't quite make it to the 2934 yesterday, but that's still going to be our support with resistance at 3032. I think we can now change this at best to range at this point. We're not below 2980, so you can't straight up say it's bearish, but at the same token, how many times has it turned around and fallen right apart? So it's just going to be a range at this point. With that, we'll go and move into the Aussie dollar. So the Aussie added on to its gains post RBA. Resistance on Thursday's session will be 68.08 and support of 67.15. So we're kind of, you can see right here, I want to say trapped or whatever, but you can see here we bounced off of that, you know, after the RBA, added on to a little bit to it, but we're just kind of sitting here stuck in the middle. That being said, as you can see, 67.15, and on the upside, 68.08, and that's where it comes in to these lows. That's going to be resistance. And the resistance will remain the same. So no changes here in the Kiwi, none whatsoever. You can see here, we're just really stuck in this range. I thought we might see a little bit better bounce in light of the movement we saw in the Aussie, considering how oversold we have been in the Kiwi. We've given up everything so cool. I thought we might even see some short covering come in, but none has transpired. We're just stuck in a tight range. So there's no changes here from yesterday's levels, which is 64.59. We're just above that right now. 64.59 on the downside, and on the upside, 65.47, which is very, very quiet. That would be just above this key level. I thought we might be able to make a move here. We're just not seeing it at this time. I'm like a bit surprised considering the rally we had, and then a turnaround, give it back. At least, if nothing else, a little bit of short covering. Not even seeing that. And on to the dollar CAD. The dollar CAD kept itself in check ahead of bias chart resistance level 3309 for the second consecutive day. A break higher finds additional resistance at 3333. Support remains at 3231. So no changes here. You can see that from yesterday. And you can see we are just hard to believe it's a daily chart because we are just stuck in the mud. So the dollar peso is back at the lower end of the last 2 weeks range. Support is 1865. Well, we've actually broken below that, and we can see this update, but let's pull this back here. We've gone and slipped below these lows, and that opens a move now to 1844. But we do have some support before we get there, which is going to be 1851. But certainly the door is open to 1844, so support's going to be 1851. And resistance is going to be 1869. We've had this break here, and looking for a move down right there. Coming in right there, 1851. And before we even get to 1844, but I'm surprised we're not even weaker considering how we've moved up so strongly in S&Ps. And then on the upside, resistance is going to come in right there, 1869. crude oil continues to fall. We're actually already at 51.37, coming into a little bit of a support band, but we've slid since that news. Moving into the dollar yen continues to advance on the backdrop of the rally in U.S. equities. Resistance remains 983, followed by 1007. Well, we got above that 983. We're actually come back a little bit here, but it's 983. We actually rallied up here. Look here to 1097. So we're actually above the 983. So we were holding there, just there yesterday, and then we finally jumped above it. Resistance will be on the upside is going to be 1007. With support at 941. Actually, it should be 939. So if we can get that slide back, 939 would be key. That was a dip we saw in Asia before we saw this market move higher. And that was not from Asia last evening, but the one before. And obviously, aided and abetted with this run that we've seen here in equities and almost seems relentless. There's also been a little bit of a peeling off. People have more of a positive outlook with the whole coronavirus situation. So we're seeing the yen come off as far as a safe haven play. But as long as we're above 927, the pivot remain in a bullish mode. Let's go in and move into the dollar index. So the dollar index finished at its best close in a couple of months. Resistance is 98.42. A close above that allows a challenge of 99.70. Support is 97.89. That's going to be the pivot. There we go. There we go. We get a close above that, and we're going back to the highs. Once again, like we've broken the trend line here, now we're above the weekly pivot. You get this close, and we're on our way. And it would almost seem likely that we would if we see this move come to fruition, which is the euro move on down to 917 with the completion of the head and shoulders. S&Ps have continued to weaken a little bit here. After this run to nearly 30, well, even above 33.56, weakening just a bit here, which is also impacting crude oil a bit. Let's go and move into the cross rates. We have seen the Kiwi yen kind of hold just above this key level, which was the 71 cent area here. But we haven't seen it add to it. I mean, we ascended to this level and then we got above it yesterday, but in a very, very tight range. But we saw the Kiwi versus dollar, and we just haven't seen any real strength there. So I guess we're just going to hold them here for now. That being said, we're still in a tight range from yesterday, so there's really no changes here. The upside is going to be 71.49. You can see that level there. And on the downside, well, we're going to have to open the door a little bit lower because I thought we would see a bit further move yesterday, and we're not seeing it. Mark's kind of pulling back. So let's go and look at the intraday. And that's going to come in right there at 70.74. 70.74. There we go. And moving into the euro yen. This market is just same thing with the Kiwi yen in the sense that it's staying within a very, very tight range, just like the Kiwi. Obviously, the euro is not really going anywhere, unlike, like I said, with the euro versus the dollar. But we're just stuck in this very tight range. Looking at the levels that we had from yesterday at 21.33, keeping that well within check right here. And on the downside, 2061, we're still looking for this to hold here. So really no changes here at this point. This is going to remain the same for today. And take a look at the euro on. Obviously, a little bit of a bounce here with the strength we've seen in the Aussie, and more so the weakness in the euro. We had joked about this before when it was no, I'm weaker, no, I'm weaker. And then we saw the sell-off, stark sell-off in the Aussie, but then we turn around and seen that the Aussie turn around and come back. And then, of course, on the backdrop of the euro weakness, but we are finally appear to have found a range here. And, on the downside, that's going to be right there, which is going to be 62.48. And on the upside, this will remain the same, 63.58. Remain the same right there. And here at the Euro Kiwi, we have gone and held this level here, and should go and be able to see a little bit further covering here on the Euro versus the Kiwi. That key level, which is actually held over the last couple of days, is going to be the 69.72. Holding above the 69.50. So we're going to go with that 69.72. We did have it down to 50 here. You can see here, I thought that was going to be key. We didn't tag below it. So let's go with 69.72. Actually call it 70. And if we look at this on a 2-hour chart, you can see things starting to try and turn around a little bit. Maybe get a little bit further follow through to be able to take us up to 70.69, which would be another 40 pips higher. Going back to the daily. There's 70.53, but we're looking for a move up to potentially 70.69. So we're going to go with that. And after a nice little short covering rally on the Aussie after it fallen out of the basement, and you can see here we came right down here to this 72.46 to 61%. That area did eventually go in and hold there. We saw a nice rebound in here post RBA. And that's taken us just above this key 74.02. We weren't able, you can see we almost made it up here. This resistance was going to be, which will be in place, which is going to be the 74.47. We actually called it 74.50 at the time. And then we're basically testing back to the 74.02. Let's go and take a look at the 2-hour to see if we can see anything just a bit below that. Well, it's going to be right there, 74.83. If you're buying this, you know where your risk level is going to be 74.83. Or shouldn't we say 73.83? And on the upside, that's still going to go and remain the same, 74.50. If we go and make a little bit of a dash up there, it'd be 74.50. Still remains bearish though after breaking this trend line. We would actually have to see, we have to get back above 74.50, take this pressure off of that for now. But to get back to bullish, we need to get back up to 75.50, 2 consecutive days above that. Let's go and move on to the guppy. So we did see this rebound as the yen has come off, but of course, we've had the sterling weaker also, so we're kind of stuck in the middle of a very, very tight range here. On the upside, we've got 43.33. That's going to go and remain the same. And on the downside, we are just below this 42.75. Let's find something just a little bit lower here. But we're still stuck within this tight range. I'll take a look here. Going to be right there at 42.39. And here with the sterling nod. It's a bit of a surprise considering the strength that we saw, the strong move here last week, turn around and give a lot of that back. But we are holding, and you can see where the support's going to come in right there. Almost like I wouldn't say quite a pivot, but it's going to be key. You can see this coming across. Let's copy this out. You see that right there? The high here, open here. Here's the close, I mean the low. So $91.58. On the upside, we are shying away from that, but at least you know where your risk level is. On the upside, let's take a look. This market is so oversold. This can be 93.04. It's a ways away, but that would be the resistance. Can be 93.04. Still definitely remains bullish. Let's go back into the majors. Euro trying to hold its own here, but I mean, after falling apart, really, I mean, we'll probably find some bulls that are going to kind of hang their hat on this and make a big deal about it holding above 110. But I mean, that close below 1020 really knocked the stuffing out of this thing. And really, any rebounds, anybody would just gladly sell on this thing on any type of a rebound here. This market would, at this point, this market is just a hardcore sell. It would need at least two consecutive closes above 11.05, and all that would do is stave off the bears. It wouldn't turn it bullish, although some people would try and make a big deal about it. At this point, people would just keep on selling it on any rallies. So just to remove, temporarily alleviate the pressure from the bears, you would need two consecutive closes above 11.05. Cable still here below 130. As we mentioned before, we have our support at 29.34 with an open target or intermediate target at 28.98. See if we can make it down there. As we mentioned, we're seeing S&Ps just ease back, but look at this monstrous run. Holy smokes. So maybe we go and ease back a bit. Short-term support coming in at 33.37. Not that far away. We're looking at a half-hour chart. And crude oil, we're just kind of in this range. We kind of paired back a bit. You can see the two ranges from yesterday and earlier today from Asia. The OPEC Technical Committee, we saw the headline make another run back up here towards this 52, above 52, but we've since given all that back on the idea of potentially cutting 500,000 barrels a day, but they've quickly given that back. And lastly, we mentioned about gold. Gold actually holding up. I mean, although we've really come off quite a bit, but considering how strong equities are, I'm surprised that we didn't go sub 1,500. So we actually find a little bit of a bid here, actually above even 1,563, which was some support on the way down, which didn't necessarily hold, but it kind of slowed it down. Then we broke even lower, and we're just above that. That's all for today. Thanks for joining us here on the European Crossover webinar. We will see you in the chat room.